Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, folks, and welcome back to another edition of Money in Motion. Today is Friday. Oh my God, it's the 13th.
Yep. I was wondering when you were going to notice. There we go. Friday the 13th. And it feels like it, doesn't it?
I don't know what it feels like anymore.
Yeah.
Good morning, everyone.
Yeah, good morning. Well. Good morning, Phoenix. Good morning, Keith. Jenna, TGIF. Yep. I couldn't agree with you more. Good day to you, Ross and Ryan. Did this week feel super long to anyone else? Yeah, I agree. For some reason, this week felt long. Maybe it's because like the first. I mean, and Monday was like kind of a holiday, but the markets were still open. So I don't know. Just felt like a long week. And as it comes to a close here, not too much conviction in really any of my positions here, but we'll dive into it some more. CJ, anything you'd like to start with, my friend?
I feel like it's just been the war. It's made this week really, really long. I just feel like when you go on the internet or if you look on social media, it's just like, especially Twitter nowadays, with the engagement posts being paid and monetized, I think that's really ruined the app. I don't want to go too far down this tangent. It's not market related, but like just going on that, it's just, you can't even do it this week because it's just so you're just going to be upset if you open the app, and that's probably the same for Instagram or really anything. But I mean, that's also, I guess you do have to somewhat face or at least be aware of the atrocities this week. Anyways, let's move on to something a little bit more positive, which has to do with markets. So Monte, if you'd like to start off, feel free.
Sure.
If not, I could pull some stuff up as well.
Sure thing. Let's start with ES, and we'll make our way down the watch list. But starting with ES and just taking a look at what we're seeing here from the S&P, it's tough to trade the first 15 minutes of the day, right? Because we had this nice gap up, it's being faded. But now we're kind of bouncing back, and I expect us to finish the week strong. And this is something that we talked about last week and the week before, and I think probably every Friday ever. But how the equity markets close on the weekend can be a big factor for how Bitcoin performs over the weekend. When the equity markets are closed, Bitcoin kind of tends to, it's like a horse that's let out of its stable for a little bit to run around. It just moves. And moves kind of without direction, and there's a lot of volatility, a lot of bucking around. But that being said, it does still move. So if we can get the S&P going today and close positive, which I think is a possibility based on what we're seeing here, just from a interim time frame, we have retraced, but as you can see, bouncing back slightly. I think that would bode very well for Bitcoin. Now, the NASDAQ is looking a little bit more worrisome. The risk on assets are looking a little bit more in jeopardy than some of the, less risky assets. That being said, again, I think perhaps this wick could have been the daily bottom. We'll see as the day progresses. But if we do close the day green on the NASDAQ, I think that'd be a big win for Bitcoin. And last thing I'll say on the traditional equity side of things is the DXY. This is a very toppy looking formation to me. You have this double top, massive blow off wick. And when you see this, it looks like, of just a failure to reclaim this high, a failure to get above this level. These two candles didn't even make it to it. And then as soon as this one did, you're seeing heavy distribution from DXY holders as this wick here forms on this 15-minute candle. So Let me just switch to the daily chart real quick, just to remind you guys what the daily chart of the DXY looks like. But this is what we're seeing here. If it closes like this, or if it closes with more of a shooting star candle kind of formation, or a just a bearish candle in general, that would set us up nicely for next week, and I think also allow Bitcoin some room to run over the weekend. That being said, Bitcoin is green on the day, is pulling back slightly here, but nonetheless, still green, still worth noting. And also worth noting is the fact.
Hey, sorry to interrupt. If we're talking about Bitcoin, I think we should definitely mention the recent price action of Hang Seng, because I think that's really impacted Bitcoin's price this week. Because I think it was a pretty bad sell-off yesterday.
In general, this chart does not look good. And when the Hang Seng trends, it tends to trend for quite some time. Look how long this downtrend lasted, from February of 21. It didn't bottom until October of 2022. That's almost 2 years of bearish to neutral price action.
Everyone's already bearish on China, though, so I don't really want to.
That's true.
Like that last low, if you go back in like between August and September, further out, closer to the right, like the most recent dip. That coincided with I think it was an Economist newsletter, or not newsletter, but magazine that said like China's economy is crumbling or whatever. So we have made a low, but 70% of the time when you get a magazine cover from the Economist like that, a year after the fact, the trend is usually higher. So I don't want to give up on China just yet. I'm not longing it or anything, but the way that people have been so bearish on it, I just, just to be fair. Anyways, didn't mean to interrupt your crypto analysis with all that.
No, it's very important, and in general, this chart just does not look great. I agree with you. In the long term, it's hard not to be like bullish China in the long term, but in the short term, there's still so much fear and uncertainty that I think we continue to see the Hang Seng slide down. But I think over time, like you said, a year after the Economist article published, it's typically, higher. I do think the Hang Seng will bounce eventually, but it's definitely holding Bitcoin back, because if you look at, the hourly, if you break this down from an hourly perspective, you'll see that there was a lot of sell pressure that occurred last night. We had, some pretty strong sell pressure. It got ran back up this morning as people anticipated a positive equity market open, only to get sold back into. So that's all I got for Bitcoin. And then last thing I'll say before I pass it back to CJ, I realize I've been talking for a while, but deal with it. The ETH BTC pair. So it's something that Nick and I have been talking a lot about. I still am of the belief that we are going to see a move from ETH back up towards at least the bottom of this descending triangle, perhaps the top of the wedge. And what's pretty interesting is the wedge is now like basically perfectly coinciding with the 200-day moving average at the top of the wedge. So it's not just like an arbitrary chimp trend line anymore. There's now a 200-day
Okay.
There's now a 200-day moving average that's actually, providing a little bit of validity to this level. And I think that a rebound to this level is definitely in the cards. First and foremost, I'd target this level, of course. But whenever ETH BTC gets this overextended, you tend to see it snap back pretty hard. And we're seeing the typical beta you'd expect out of a higher performing ETH relative to Bitcoin. So if we close the day today, just to sum up my long-winded rant, if we close the day today in the NASDAQ green, I think that would bode very well for crypto. And the way I'd play it is just ride ETH BTC up to the bottom of that triangle and then perhaps consider taking some profit there. I think that pairs trade is looking favorable from a risk reward perspective. You got defined risk being the bottom of the downtrend, and you also have a price which you take profit being the bottom of that wedge there. So that's all I got. But CJ, I feel like I've been talking forever. Your turn. Please go ahead, my friend.
Oh man, the pressure is on now.
Yeah, better.
Yeah, let's not forget. Tough act to follow. Yes, let's not forget this up only move earlier in the year.
Yeah, that
was the start of the year. This is what basically started the Bitcoin echo bubble, and it's very impactful. Bitcoin's, this last week's really shown how much of a global asset is. This uptrend, because S&P was not going up at this time. S&P was kind of going down, and Bitcoin was holding its own. So you would have to ask yourself, okay, well, if equities reverse, which they did, what's Bitcoin going to do? And it went from 15 to 30, and that was the echo bubble.
And there was similar sentiment about China back during that time. About you mentioned The Economist. I remember a bunch of other major publications talking about the death of China and the death of the Chinese economy. And then it subsequently went on to just absolutely have this face melting rally to the upside. So,
yeah, we'll see. Yeah, obviously the largest mover of the day and what's drawn the most attention has been gold. Another example of kind of the power of crowded trades. But one thing I wanted to talk about today in terms of like large trades or the power of crowded trades are kind of the way that I think about these futures markets. So I think the hardest part of trading this style for me is kind of understanding the aspect that 3 to 5 of these trades, like let's say if we go to 2000 from here, or the dollar was a good example of this trade earlier in the year that I missed. We talked about that yesterday. But if you take the fact that there's like 35 to 40 markets, futures markets that we're looking at, of those markets, there's probably going to be 2 really good trading opportunities in each one of those markets over the course of 1 year. So that means there's probably going to be 70 really good trade opportunities over the course of the year, of which we really only have to catch like 3 to 5, and that can make the entire year. I can make our 10% or our 15%, wherever that kind of like we get it between those goalposts. Monte's a really good soccer player. He likes that.
I think it's a football analogy, but yeah.
I was thinking just, well, what do you in the goal between the goals? Yeah. Anyways, you scored. We scored. Anyways, so don't worry about missing trades. That's number one. And number two, like understand that in many cases, only 3 to 5 trades are going to make like the entire year. So, perhaps this ends up being the case with gold, perhaps not. Either way, it's a really nice move to start. And, we're looking towards the 2000 level. I do think it's an interesting day to start taking a little bit of profits because this has obviously been a massive short squeeze. There were a lot of, really strong bears or a lot of just like really large speculator shorts and bears down at these lows that have obviously been squeezed. Now, the thing I want to mention about Swiss franc and what I like here is that when I compare this to the early trend in the dollar, we had our first week of positive price action, pulled back a little bit, and then just continued trending. What happened here, which I see is somewhat similar to a Swiss franc right here, is that there's no guarantee that this beginning uptrend in Swiss franc will be anything similar to what the dollar saw early in the year. However, there's a possibility that it could, and each trade has to be traded the same. The positive thing that I see, one, this trade's still crowded. Secondly, even if you were spooked yesterday, which, in all fairness, yesterday was pretty scary with CPI and whatnot. There's a place of defined risk now at our previous dip. So if I wasn't in this position, or if I wanted to add to this winning position, I could put my stop loss at the bottom of today's low or yesterday's low. They're basically the same. And see what happens and look for this continuation to go, higher. And I think the same somewhat could be applied to gold, although it hasn't really pulled back. That, like, yesterday was a good example of that, where you had a pullback in gold, very, very strong pullback. Once we started to go up and create that defined risk, that's another instance where I could be like, okay, we've bottomed in the interim. I have a very clearly defined risk, and there's still a lot of shorts who are trapped back here if we keep going up. And, you know, that was you got a nice pop in gold off of that. We'll see if the same happens in Swiss franc, but we're starting to get the beginning of that setup, in my opinion. And at least risk can be defined. And so that's what I would be looking at for those pairs. I will say it, like, I think somebody said, like, CJ and Monte are the best traders on YouTube. Like, if you follow them, you will make money. I have to be due for some mean reversion after that statement. Like, think about the trades we've had in the past few weeks, like oil, Swiss franc, now gold. That is not like typical. That is very rare. And, you know, if you look at me and you're like, oh, CJ and Monte are on a roll, they've hit the last 3 trades. Don't go and put all your money in the 4th trade, because it's probably going to be wrong. Like 60% chance it'll be wrong. Like, that's just the course. So, you know, it's not always like this. The last thing I do want to bring up in terms of next week, the gold Heikinashi, says Phoenix. I like Heikinashi candles. Haven't looked at them in a while. But anyways, last thing I want to talk about in terms of potential new setups going into next week. And this trade, I think I already missed this trade, to be perfectly honest with you.
I don't. Oh, never mind. Sorry. I thought you were going to say you missed the Swiss franc. My bad. Continue.
Nah, we got that one. At least what it's done thus far.
Yeah. I think there's more to come, though.
It's been the strongest. Like, euro has been very weak.
Yeah.
And when you compare, all right, so the grains are actually down. I'll have to check the WASD report, came out yesterday. But, like, you look at a lot of these assets and they're crowded in terms of shorts to the downside. You have a lot of large speculator shorts in corn. You have a lot of speculator shorts. Well, ZL is actually starting to become neutral. It's still a little bit crowded, but that downtrend kind of resumes. Either way, it's ZL's brothers, ZM and ZS, actually popped a lot yesterday. So maybe look for, you know, see, I already feel like I don't want to chase this move. But if you were to look at the positioning, we are somewhat crowded to the short side if you were to look at large speculators. So I'm looking to fade them and do the opposite. The problem is WASD kind of made these things spike yesterday. And look, somebody told me this joke. They said, look, man, grains are for eating, not for trading. And I don't necessarily disagree, but those are interesting setups. I think I missed them. But either way, those are some crowded assets that are starting to move.
Yeah, definitely crowded. And for anyone that's been watching this week, yeah, I did go ahead and exit my ZL position. I'm out of
well
that.
Done.
Like you said, the funding isn't as convincing as it has been.
The funding rates.
The positioning isn't as favorable as it had been in previous weeks with the shorts piling in. So I went ahead and exited that just to let everyone know. But I am still long Swiss franc. I am still long ETH BTC. Those are my, and also we didn't even really talk about energy too much today. CJ, do you have any thoughts on energy?
I was going to. I switched the thumbnail because I saw that the master trader had actually talked about shorting oil. So I was like, all right, now it's time to just let this one go. Look, it was a good trade. Like, it squeezed a lot of longs out earlier in the week. So let's let the longs build back up, get really bullish oil again, see the COT report and the positioning come in. Because what's it up? Like 4% today, CL? Yeah. There'll probably be a second round. We'll get... Monte likes boxing a lot, so we're gonna ding ding. We're gonna get the second round going probably eventually in energy. I don't think it's quite time right though.
Yeah, no, I think I'm really looking forward to your futures report on Sunday. I think that will be really important because we're kind of at like the midpoint in a lot of these assets. So I'm curious to see how traders are positioned. I feel like we're gonna see a lot of oscillators kind of showing neutral signals. But we'll see. We'll see. That's just my prediction for the COT data, but you never really know until you get it.
So gold was at 100. I'm guessing it'll be at like 80 or 70, maybe more. And once it gets to 50, that's when I'll close it.
Right.
Because it shows that the perceived edge has been exploited in capturing the losses of those short traders.
Yeah.
So
yeah. I think that's a very solid way to look at it. And like, that's such a great example of, people always, when you talk about risk management, you think like, oh, just price targets, but there's way more to it than that. Like for us, risk management, price almost has nothing to do with it really. I think looking at positioning can tell you a lot more about risk reward than just looking at, a chart and looking at levels of, levels of resistance or critical levels. Understanding how people are positioned, I think, is where the real edge lies. And we will find that out at the end of today, and CJ will break it all down for us during his Sunday futures report. So definitely be on the lookout for that.
Well, that's about all for me today, Monte. So that's
yeah, that's all I got. Just want to say thanks to everyone for watching. Appreciate all of you very much. Hope you had a great week. I'm with you, Ryan. It was a bit of a long week. There was a lot going on, like CJ said, but we made it through and lived to fight another week. But yeah, that's all I got, CJ.
Thank you, everyone. Hope you have a very nice and safe weekend. We'll see you here back on Monday. Take care.
Thank you for watching Money in Motion. If you want more from Monte and CJ, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description. Thank you, everyone. We hope you have a profitable week.